Welcome to TradeTheNBI.com. This is John's reports for the 9th of February. Well, the rise from before fell yesterday, right back to the exact same supports, and that's just what we're looking at. That supports are holding, though we do have an interesting development here of the white NBI finally getting above 5 as we get close. On a daily, 5's good. Intraday, you would need closer to 8 uh, for short activity. However, DOC still cyan under red. However, we do have some red fading. So it's just one of those uh, back and forth. And steel, of course, still hasn't even popped back above cyan in this particular case. So, you know, uh, not much activity from short-term buyers, meaning that as soon as, if they choose to activate, that would be enough to be able to push things through past that 4,200 range. So a little bit of weakness, but nothing out of the ordinary. I mean, I think we're just in this little range until there's some sense that economically they've got a clearer idea, or that things are just going to remain status quo. Status quo is just as good for the markets. They like it. That's why they like divided government, because things don't tend to get done. And that makes it easier for business to predict what will be, because something's going to change. NQ, likewise, everyone's supporting right on the previous algo levels. So this is just pretty consistent behavior. Don't see any major shocks at this particular stage. Treasuries all over the map. Actually, let me just blow this one up because we don't need to see the full length of it. We know the story. There's a huge amount of demand, and that certainly drives yield down. And it's that increased demand that I think is probably going to be the catalyst that will end up putting pressure on the market. If people believe that inflation is being tamed, you're going to want to move into treasuries to capture the bonus yield now before their idea that rates are going to get cut, which would generate great returns for them. As long as they're not wrong and the Fed, doesn't increase, which the Fed has said they're going to. So you have to kind of ignore what you're being told, which the market clearly has been doing. And they feel that the Fed has no options, and that may be the case, but they certainly have seemingly been able to do things that you would never have imagined them doing. Some of the interventions worldwide with liquidity and things like that. I mean, the euro shouldn't be where it is, and there's just a whole lot of things that they have been doing intervention-wise that I think are surprising, but the market discounting it is an interesting one at this particular point. Will there be a day of reckoning where the market realizes maybe we got it wrong? We'll see. We don't have that signal yet. I mean, and significant money will move before then, and we will see the changes in the ratings. From an oil standpoint, again, still elevated, and this goes back to our discussion before. We may be looking at 70 a barrel as a new base until there's a significant change in policy at a minimum, and that may just be the floor that's established now with the inflation and the devalue of the dollar, and that would give a clear representation of exactly what kind of dollar level decline you've experienced. You can already see it with purchasing power. If you look at the same classic basket of goods, your eggs, milk, all that construct, definitely much higher than the reported inflation rate, which is always interesting. The reality doesn't seem to match government statistics anymore. Gold. Um, Holding just under that 19. I don't see any reason why it won't. I mean, we've got a full consolidation right there. Took a nice little dip down. Short starting to fade. Um, Midterm buyers looking to jump into the discount there, and we'll see if there's any additional, conflict. I mean, right now things seem fairly benign, but tensions have really not eased at all. Euro still popping back up. And again, it's just going to fluctuate in this range most likely, as long as they've got the dollar support to buy energy, and that enough to hold it up, from collapse. It's certainly the debt issues are not going away, but then again, they're not really going away for the U.S. either. It just becomes um, a numbers thing now. Bitcoin, right at the support level. It was just enough to hold on. However, now we have white MBI above the magenta. That poses a problem because that would call for a move towards the 50% if we didn't have such a significant DOC red leading the cyan. So yeah, cyan under red, always the buy. The problem is when you get the steel dipping below at negative 13, that's weakness. So steel has to get back above that 13, but crazy readings with that shakeout and still rising gold. So I don't think the full retrace is available at this particular stage, given those readings. And you can look at ETH looking stronger. Yes, you still have the magenta under yellow in that, but um, same cyan under red, but above negative 13 for the steel. So that's going to be enough to sustain it, and in this case, over that 76% range. Yeah, and as I was preparing my charts, of course, TradeStation decided to crash and have to reboot. But the intraday action from yesterday was mostly down, and wasn't until later in the day in this post market that we saw a nice bounce back into it, which they're just shaking out weak hands and moving it right back up to the same bar. That's why we're literally right in the middle of the range that we were from the other day. So that's the long and the short of it. As always, trade well and talk to you later.